it's Brian Shannon from alphatrends.net. Today's Friday, the 24th of August, 2018. Hope you had a good week of trading. It was obviously a record week for a number of the markets here, and we were green pretty much across the board except for the volatility index. So let's take a look at the charts, and the S&P 500, as we see here, closed at what is an all-time high. This is our previous closing high over here. I don't know how my line got adjusted lower, but we are clearly above that, and as I was pointing out earlier in the week, we still have a clear pattern of higher highs and higher lows. So looking to a 30-minute time frame, we've got our first potential level of support next week down here near the rising 5-day moving average, and you'll see that we did hold above that rising 5-day moving average on the little pullback we saw Thursday. So that was also the prior resistance level. So that's our more important level near term. And then just below, we have a cluster of volume-weighted average prices from these recent gaps in the 284 and a quarter, 284 and a half level. So nothing's changed here. We're innocent till proven guilty. We're in a long-term uptrend. We're in an intermediate-term uptrend. We're in a short-term uptrend. And the same is true for the Nasdaq, which we didn't make a new all-time high here, but we did see that this market behaved as we wanted it to. In other words, last week we talked about breaking this downtrend line, rallying up, and then pulling back to the rising 5-day moving average. It did get a little bit choppy here on Thursday, but again, we held above the rising 5-day moving average, and you can't judge a trend based on one day unless you're an active day trader. You have to look at the composite and where we are. So again, as an intermediate term frame of reference, when we have a rising 5-day moving average, I consider the market innocent until proven guilty on that intermediate term time frame. The Russell 2000 didn't pull back to the 5-day moving average. I thought it might have a chance to do that, but instead it continued to move higher. So this market, we were looking for it to break out as the energy was building, and it did in fact break out. So that trend line that we had drawn in, and the fact that it held the volume weighted average price from the May low on that on the tests of that trend line, also with the compressed volatility here in this ascending triangle, we broke above, and it looks like this market should be able to continue to move higher. I would be, a little bit not concerned, but just a little bit more cautious if we were to get below and hold below 170 next week. There's nothing here suggesting that. The long-term trend remains very healthy, uptrend still intact. Semiconductors still compressing their volatility in here on the weekly time frame, and on the daily time frame, it's really kind of a mess in here. But if you've been trading, from the long side, clearly that's the correct way in here. We are above a rising 5-day moving average, and it's innocent until proven guilty on the intermediate term time frame. However, on the daily time frame, we've still got pretty much a big mixed mess in here. So if you're trading, for a couple days at a time in either direction, that seems to be where the best opportunities are. I personally haven't been trading the semiconductor index. Biotechs look like they're still building energy for a break higher. They haven't given us a reason to purchase yet. We were looking at buying above the 118 and a half, 118.60-ish level. And this week we saw that we saw a pullback, but now we're back up into this a higher low, that is. So we had this low and then a higher low. If we take a volume weighted average price off of that low at the end of the May, you can see we've broken below it a few times, but we still remain in a constructive pattern with this higher low here. And now if we break above these recent highs, I think the biotech should begin to catch up to the broader market and probably start to outperform a little bit. The energy names we spoke about last week, and we talked about how they came down to the 200-day moving average, and it looked like the potential for this prior band of support to offer resistance. But I was very clear to say we don't sell short just because it's at a potential level of resistance based on prior support or based on a declining 20 and 50-day moving average. Instead, what we want to do is wait for confirmation. So if we take a look at that volume weighted average price from the most recent gap lower, the buyers have regained control nicely with their average price at about $73.10. It's also above the rising 5-day moving average. So there's no reason to sell short until we have confirmation. So I personally didn't think it made sense to buy down here. If you bought down there, just be aware that you should have stops. Most likely, I think, from an intermediate term perspective, down near 73.70-ish or so. That wouldn't be a reason to sell short unless we saw that this market began to do something that might look like this. And I'm going to just draw in, kind of a sketch of what a scenario might look like where it looks like the potential for a market to be shorted, where, we'd see the 5-day moving average flatten out like this, getting below the volume weighted average price from that move. So in other words, I don't see that happening in the next few sessions. Instead, I look at all these markets and see that the buyers remain in control. It's been a great environment for stock picking, and I'm sure a lot of you have great gains. Just be sure to protect them. And if you need help finding ideas, that's what I do each and every day at alphatrends.net. Take a look, and thanks for your time. Have a good weekend.